Jean-François Lambert is Global Head of Commodity and Structured Trade Finance at HSBC. He joins us today to discuss shifts in trade finance. Jean-François, welcome to Geneva.
Thank you. Good morning, Nicolette.
Jean-François, you said in a recent interview that developing countries are shifting away from commodities towards more value-added products. How does this impact trade finance?
Well, the banks, trade finance banks are following very closely this market, this shift. But definitely, if you're financing commodities, for instance, you are using very basic instruments and to take very peculiar type of risk. When you are at the other extreme of the supply chain, i.e. when you are financing sophisticated products, then clearly the open account is more the norm than the exception in that respect. And of course, the instrument of the way we are going to finance and appraise the risk we are taking is very different.
And is this shift really happening, and is it happening everywhere? Because in some countries like Russia, for example, there is no great incentive to move away from the commodity model.
I think that's a shift which is not happening everywhere. And it is, of course, if you are relying on a vast source of commodities, and if that commodities is priced at a very high level, why bothering? At the same time, potentially, the development will require that you are focusing more and more of a more sophisticated product to create added value, to create different types of jobs in your country. So that shift is happening in some countries, but not everywhere. I can give you very simple examples. For instance, there are countries which are producing commodities and which are more and more reluctant to export these commodities at a raw level. They would try to create as much as transformation of the product as possible. Take Indonesia, for instance. Okay, and conversely, a country like China would be very keen to import the raw material, so that the added value in the transformation, like in the soya oil, for instance, sector, the value in the transformation is in China rather than in the supplying country.
Makes a lot of sense.
It does.
Trade finance itself has undergone a shift. I mean, we've seen the big banks, the traditional big banks, come out of the market for balance sheet reasons. There seems to be more intervention from local banks, and last but not least, we are talking about securitization of trade finance. What is this securitization? What sense does it make, and who is it for?
The securitization makes sense if you are in a situation where you don't have enough liquidity in the market. And then suddenly, who else can finance you if banks are not financing you? This is not the case today, by the way. Today, I believe that there is enough liquidity in the market to sustain and to cater for the needs of the industry. However, potentially, especially in the commodity sector, you might consider that if world growth starts eventually to pick up, then commodity prices are going to follow through, and then thus creating a higher level of financing requirements. Then funds could be a very interesting alternative, and that's why most of the players in the industry are trying to develop this. Who is going to invest? Who is going to appraise the risk on this trade finance activity is the whole question. It is not easy if you're an investor used to invest in very classical products to suddenly shift to trade finance. The counterparty risk you're taking, the assessments of these risks, the potential commercial risk we're taking, all this is very alien to investor. That's why I believe that Whilst this is a very important move, this move will require a lot of intermediation by financial institutions such as us.
A recent study by UNCTAD points out that 2/3 of commodity price volatility is due to financial trading. Does that seem plausible to you?
A big debate always about what speculation is all about. Is speculation is a financial speculation versus the real activity, the real life activity. I believe that Professor Chalmin used to say that speculation versus the fundamentals on commodity price is a bit like the crest and the wave. Speculation is a crest. The underlying movement is the wave. Wave is much more powerful than the crest. Having said that, I think that you should make a distinction. One should make a distinction between different type of financial volatility and financial trading. If you're talking about pure financial trading, completely disconnected from physical, I believe this is not much today, and the effect of that is not very, very significant. Because at the end of the day, when you are treating pure financially commodity flows, you have to either deliver the goods or take the goods. It's not like another instrument. So it means that there is a degree of reality where a pure financial player cannot really take a huge and significant position. But for a trader, it is part of his activity, his DNA, I would say, to optimize his flows. A trader optimizes. A trader is about optimizing the optionalities. Okay, the source, the timing, the destination, all this is important, and depends on what the market is doing. And sometimes, in order to be fundamentally long, i.e., to source the commodity, to be able to deliver the commodity, because the trader sources and delivers the physical, he will have to protect himself on the way, with the financial instruments. So you have probably a degree, sometimes a significant degree of financial trading, but which is totally linked to the underlying flow of physical.
Last but not least, you have your own viewpoint about the role of trade finance in the future strength of the renminbi. Can you tell us about that?
Nicolette, if I may, I'll put it in a different perspective. I think that when it comes to commodities, there is an important factor which is often missed, which is the fact that the commodity markets are usually markets where the supplier has the strength, has the power, versus the numerous buyers. We all need the commodity. We know we all need oil, and of course, those who produce the oil have a very strong influence over us. But over the past few years, there is a shift, which is quite an interesting one, which is suddenly you have a major buyer in the commodity markets. And a huge one, China. China represents probably 40 to 50% of the copper market and of many others. Okay, it's probably the first consumer of soybean, of palm oil. When you are a player with such a strength, suddenly, you have probably a rebalancing act in the making, i.e. vis-à-vis the suppliers, which are very strong. They have one significant buyer. That buyer eventually is going to dictate its terms. And the terms may well be that the renminbi would be used more and more to pay, and maybe one day more to quote the commodity prices. So that's the interesting development. Not done yet, but on the way.
Jean-François, thank you very much for being with us today.
Thank you, Nicolette.